Good morning, everybody. It's the Wall Street Weekly Wrap-Up with your host, John Newquist. April 27th, 2024, and it's earnings week, and we are excited. Alexa, stop, because we have to have Alexa always interrupt us. But let's take a look. Meta. Well, we'll start out with the bad news. All right, first of all, Meta beat by 39 cents, and revenues rose an stunning 27%. Wow, that's a home run in both departments. And they raised CapEx guidelines, talking about spending like $10 billion or whatever, billions of dollars on AI chips to make it better, which is perfect. Street doesn't like that. Street says, oh, there goes all the money. There goes all the revenue. Well, Zuckerberg's going to invest in it. I mean, Instagram's hot. Facebook's doing well. Reels are great. It dropped down. People didn't like it. Here's your chance to buy it at a decent deal. You got to remember, you're making 27% revenue increase. You're making a lot of money. You're making $1 billion. There's nothing wrong with this place. There's nothing wrong with Meta. And it's a chance to buy at the low if you want to get into it. You're at the low range of the chart instead of always being at the upper range. I like the stock. We're in it for a while, and we'll be in there. Because remember, we were in it like before it split. Google. Well, there's a hammer. Look at this thing. Popped it out over the trend line. Well, beat by revenue. Cloud up 28%. Who's winning in cloud? Google's doing real well. A cash dividend, which I applaud. Meta did it. Now we got it. Now all the big techs have a dividend, and that's important because that's going to be what people like to see as it gets rated better and better. Revenues is a stunning 50% to $80 billion. For the quarter, $80 billion in the quarter. That's a monster revenue. This company makes more than some countries. I mean, some European countries. The averages, S&P, well, it's the high. We got the SPY up here. Look at us. You know, we were doing great. Then we had the sell-off, you know. Started out with that ASML earnings and kind of dropped for a while, and now we're okay. So, you know, S&P 500 is where you want to be. A lot of people are trying to time this market. That's a tough market to time. You know, you could say, okay, it's coming down here. It's going to go down to the 200-day moving average, but it didn't. It bounced past the 50. It's on the trend line. I would say if you want to be in it, you better be in it because you're getting a chance to buy it below the trend. And the earnings do look good. You know, everybody's worried about the interest rate cuts. We just watch the earnings and stuff. I mean, you know, you get the earnings will survive the interest rate cut or no cut. We're at either 1 or 2 for the year. I don't know. I mean, we might not even get any. 2-year unchanged at 5%. So people are sitting with trillions of dollars on the sides. They will always have trillions of dollars on the side because it's too much risk for them. You know, a lot of people use the, you know, 110, take your age minus 110. If you're 50 years old, you're going to put 60% in the market. If you're 30 years old, you're going to be putting in 80% in the market. You're still talking the other percent is going to go into money markets and stuff. So you never beat up anybody who puts it all in the, you know, stocks or, you know, put some combination of stocks and bonds. Well, what are we looking at? Okay, crude's up at 82.3. I think it's going to go to 100. I honestly do. I think the summer's going to be kind of brutal. I think we're going to have a couple days. Still tension in Israel and Iran that didn't go away. It just kind of been quiet. Natural gas is starting to creep up to $2. Remember, we're making a lot of oil, so we're not going to have that much problem with gas, but a lot of people need it. Not for the winter. You know, they need it also for, you know, heating up plants, too. Gold, 2,300 still. Good. It'll be up to 2,500, you know, give it this summer. Silver's $27. Wow. Remember, it was all-time 50. Copper, over 4. We're in a good economy. When I always say copper breaks $4, we're kind of going good. So at a 2-year high, here's a copper chart. Sitting there at the high. That's a good thing. Who benefits? Freeport McMoran, and we'll talk about that company. Microsoft, Azure, up 31%. This is a little bit better than 28, but I'm telling you, these are huge growth numbers. They can't build these data centers fast enough. They got so much stuff they want to put in. As the chips can handle more and more data and integrate it and pull it out and dice and slice and give it to the customer, this is what they want. Revenue, 17%. You know, this is the largest company in the world. And it increased revenue 17% to $61 billion. So another one of the $50 billion clubs. You know, I always look at the revenue because, you know, this is a company that's got pretty dependable revenue stream, you know, between Office and Windows and everything else. So it's in the trading in the range. You know, you can get in now, you can wait, but it's, you know, you don't want to try to time it. I just buy some now, buy some later. ExxonMobil, you know, oh well, it missed by 13%. The revenues dropped 4%. Okay, now oil companies, I don't look at the revenue so much, you know, because, you know, the price of oil makes a difference, right? And we've been, you know, we're down to 70s for a while, and then now we're up at $83. But here's the thing, $5.7 billion in earnings. Yeah, it's not like some of these other companies. They have 83 billion in revenue. That's a lot. That's a $50 billion club company, and we like it. So people are out there, oh, I don't like Exxon, I like Chevron. You know, it doesn't matter. Just do they make $1 billion a quarter? You know, because if you make $1 billion a quarter, that's a lot of money. And they made 5.7. So we're going to stick with Exxon. Good dividend, good management, making the money. Snap is one we bought in. We knew it was going to be a lot better than it was. When the earnings sold off, we had a chance to get in pretty cheap, and we bought it. Why? Because Snap is TikTok now. If you didn't notice the change from January to present, you can't tell the difference. I mean, they can put the stuff up there. They can do this area. It's well done. The algorithm has changed. You know, I can find myself paying 5-10 minutes on Snap just looking at all these great videos, you know, from sports to, you know, wrestling to anything else. It just figures out what you like and it does it. And I think it's going to be an area. And the issue is going to become who's going to pay the content creators. Right now, you know, advertisers pay people on other things. I get to watch some of these people on Snap and Instagram and everything else. Oh, I endorse this product. I'm going to try it. And I'm telling you, this teen market, you know, I mean, under 18, I don't care, man or woman, they are endorsing stuff right and left, getting free samples. They're paying these people because they are such big influencers for the new products for the area. Very cheap advertisement compared to, you know, hiring a guy like LeBron or, you know, a fashion model or somebody else that's expensive. So these influencers, you know, they have thousands upon thousands of views every day. And, you know, they know how many people watch it. They can see how many people go in there. So Snap beat by 29 cents, a big beat. Earnings are positive. Revenues up 20%. We saw that. We knew that. We didn't have to wait for this report to find out it jumped up a lot. And I think we're going to get to 17 within the next 3 months. So you got plenty of time to still get in the Snap train because it's going. And if TikTok Man happens a year from now, which, you know, we don't know. You know, TikTok's like $64 billion in revenue. They're not a pushover company. You're going to have to be a big company to buy it. And if you're ByteDance, you got to take the money. You can't be letting it just disappear and be banned. That's stupid. Let somebody buy it and take the algorithm with you because you never lost the algorithm. You can just make another one and make it better, you know. Nucor missed by 21 cents. I like Nucor. It's a big miss, but that's all the steel companies. There's not one of them that did real well. Again, the March was tough on manufacturing. You know, the quarter was tough. And they make $3.46 a share. Revenues fell, so it just dropped. It's down at the 200-day moving average. If it gets down to this level, that's a good double bottom. I don't know if it'll get down that low, but we'll take a look at it. You know, I'm watching it because Nucor's well run, and if the economy picks up like I think it will be, Nucor's going to be a beneficiary of the economy. Right now, tough stock to buy because of the miss and the drop. Freeport-McMoRan. Boy, copper, gold, those two biggest streams of revenue for Freeport are the things that are hot. Beat by 5 cents, 32 cents a share, 17% increase in earnings. It's up here at the top range. We knew this for a long time. Freeport's well run. It's going to do well in this market with the metals being hot, and we're just going to ride along. NextEra missed by revenues, and the big thing was revenues fell. So the minute you see a utility, because we've had NextEra since 2008, and you got to dig why it did it. You just can't say it just dropped in revenue because utilities just don't drop 14%. So we found out they sold the Texas pipeline, which is a chunk of their revenue. About 14% of their income disappears. What are they going to use it for? They're going to go to the solar farms, which they know is good because solar is cheaper and cheaper and cheaper every year. So the amount of investment to put out a big solar farm is probably half of what it was a couple years ago. And now you're going to generate all this revenue. The battery technology is good to store the energy. So NextEra is seeing that, and they're going to hop on this. And, you know, like I said, I expect this next 3 quarters to see revenues down because you're comparing it to the Texas pipeline era. And then the next quarter of this year will be what we want to look at. So we kind of expect some misses and stuff like this. It might fumble around. We bought this, it's, let's say, $65. We bought this at split adjusted probably at like 10, something like that. I'm just going to pick a number. But the dividend increases every year is averaging now 24%, from our increase of prices to the thing. So we're making original investment 24% every year. Next year it'll be higher and higher and higher. That's one of the things that the magic of compounding. When you get dividends, like Buffett gets more from Coke dividend than he paid originally for the Coke share. Why? Because the magic of compounding. And that's why we look at companies. So we're not in a rush to sell it. We're going to find it. If it completely fundamentally is breaking down, then that's a reason to get out. But it isn't. Tesla we watch because one of the Magnificent Seven. Again, Amazon is the one that's going to report next week. But look at this. Look at it. I mean, it missed on revenues. Fell 8.7. Remember, Toyota set the bar up 9.9. They all say, oh, the future is not hybrids. Everything's going to go electric, blah, blah, blah. I mean, they're having problems. And they got hope of robo-taxi and the software being licensed and a lot of hope. But, boy, this has been a downtrend for a long time. And I think, like I said, I firmly believe that Elon Musk is too focused with his social media. You can't go from 80 hours a week to 120 and be an effective leader. You're just going to lose things. And I really think he just needs to get out of it. He's got to decide he's going to pick Tesla or X and go with it because he's doing a bad job at both places now. EQR, one of our REITs that we own, we always going to have at least 2 REITs in our portfolio, and rose 6.3, pays a dividend. We'll go up there. The property commercial side is pretty tough. It's a lot of vacancies. I look at San Francisco, Chicago. There are buildings that are sitting kind of empty. I live in DeKalb, and we got strip malls that just sit there and nothing. They can't get tenants. I mean, they got like 1 tenant out of 10. That's horrible. So, how do you pay the taxes? I don't know. You're trying to find tenants, but you got to have a tenant to come in, and pretty tough. Boeing, again, one of the big Dow companies, and the reason we're watching it is it just is having nonstop problems. I mean, we got up here to 200, and now we're down here, and well, how low could it go? Well, remember COVID, it dropped bad to 80, but revenues fell, loss in the quarter. Boy, I mean, people can't wait for Calhoun to get out because the CEO is they're going to take the blame for all these things that have happened, and unfortunately, we're not going to see a change until the end of the year. Vertiv, another one of our portfolio stocks, does the ventilation for the data centers. I see them there. I just said, well, why am I always seeing Vertiv? And then I looked them up, and wow. So we got in. It's going up. Revenue's slowly growing. They've got the confidence of the data centers to put in the best ventilation system to cool the big, huge, data center cubicles, I call them. But, these power things they generate a lot of heat, and you got to have ventilation, and they do a good job, and it's working. So you're getting a lot of work, and I can see it as a continuum. So not really a tech play, but it's more of a technology installation play, if that such a thing exists. But I like it. It's a good company, and it's well run, and everybody seems to like working there. Merck, another one of our portfolio holdings, up by 17 cents this quarter. Earnings solid, 8.9% in revenue. Again, Merck was one of those things, it was bad for, if you go back way back over here, it was pretty bad. But Merck's been solid, doing well, got a good pipeline. This is kind of a rough chart. I mean, this is like if you have stock, this is like it goes up, comes down, down, up, jump, down. Boy, that's where you get the antacid pills. I mean, but it's a good company. Just remember, a good company, good solid earnings. It's doing well. The pipeline is great. T-Mobile we watch because T-Mobile was, between Verizon and all the other ones, AT&T. AT&T I didn't think had a good quarter at all. Comcast had a horrible quarter. But yeah, watch it. You should be getting increases in revenue, and it fell. This is like a rarity because T-Mobile was always winning out of the big, phone companies for the connection service, and this one it fell down. So that's kind of why we're going flat. And I would not be surprised if people are seeing it become more like a bond. You get your nice interest dividend, but the stock is meandering. You're going to see it come down lower and lower. And then Intel, again, we had Intel at one time. We bought it, we sold it, made some money, and now it's been down like a rock. I mean, people are beating up Gelsinger, but I don't think it's as bad as they say. First, they beat 18 cents a share. It's not negative, and they rose revenues. ASML did drop like 40%. This company didn't lose 40%. They gained revenue share. It acts like this thing is toxic. Look way down here. I can go back to like 2008 when Intel was like 25 bucks, and now it's at what, 34? Oh, S&P been up like triple that since then, or quadruple that, and Intel's just been the dog to own. But they're going to get a lot of money from the CHIPS Act, and their chips aren't bad. Don't remember that. I think it's got a potential. If it gets down much lower, we're going to start buying Intel. We're looking, if you can get it down to 30, let's say 30, and it's gotten up to 52, I think it'll be up there. It's just in a bad cycle. It's sold off. Let's give it a couple more days to sell out a little bit more, and then maybe nibble back into Intel. So, got your chance. We haven't bought it yet, but we're looking at it. And, one of the things I do is I track, because we always want to buy top in the sector or good in the sector, and we looked at the financials. Wells Fargo up on revenues, JP Morgan, our stalwart firms ever. We've had this over 10 years, 9.3% increase in revenues. BlackRock, we're watching, it's doing real well. Think is really taking this thing up higher. Goldman Sachs had a great one after they got rid of all the other things they were doing wrong. A lot of revenue. But Morgan Stanley, solid 4.3% earnings. We want them to grow, and that's how I do each sector. I got, this is just a snapshot for right now. It'll get bigger as the thing goes through. We haven't had NVIDIA to report, so we don't really want to put the text up there. But overall, this is a hard week for people. It started out horrible after 5 days was horrible, and then, some stocks like Meta went down a lot, but you can see Intel, pretty good, and some of the drug sector stocks took a hit, except for Merck, But our stocks, Google up 11%, NVIDIA up 15%, Microsoft 1.8%, Amazon 2.3%. All solid growth stocks. And of course, we don't show Snap up 26% yesterday alone. But we had a good week. Let's keep it up. I'll see you next week. Thank you.